Okay, all right, guys, let's get into it. It's the trading room. It's the midweek update for the 22nd of June 2022, like 2222. Kind of fun. Let's get right to it. I'm going to give you my 2 cents on the markets. I've got some trades to look at. I want to make some comments on some of the things we talked about on Sunday and what Corey said in the update on Tuesday. Now, Monday, the markets were closed, and it's a pretty good week to be closed. Let me jump right into it. You guys take responsibility for the outcome you understand. So the volatility continues as the markets are searching for their next support level. Rob said, hey, we could see a bottom. He doesn't want to call it the bottom. Had a +2 for the week, -3 for the overall month, and nailed it. We knew a bounce was coming. I think the markets expected it as well. I've got another chart here to look at that really just kind of led me to believe that the oversold retraction was going to happen. Revision to the mean is what Corey says back in on Tuesday, yesterday. So that's actually happening, and it's happening perfectly. However, it's difficult to trade because it gaps a lot, and it's going to be super reactionary based on what the Fed says. And I'm going to go ahead and call it Fed speak. This week is just basically Powell coming out, where they're at, a bunch of different heads around the nation. Even tomorrow, Powell comes out again. And then I think Thursday or Friday we have, I think Friday then we have another head share out of San Francisco. So it's going to be a whole lot of what we're looking at, what we think, things of that nature. Not a lot of numbers. I've got a couple to look at here. So it's going to be very difficult to tell when and where a bottom could be as the gapping and reactionary trading will continue. I talked about this last week when it comes to the markets are searching for a bottom, and we're kind of in a free fall mode. Even with yesterday's gap higher, and today we were negative, we turned positive, and I imagine that's going to continue throughout the day. Powell comes out and says, hey, the economy's strong enough to absorb the direction they're on when it comes to being hawkish and so on and so forth, and I truly believe that. Keep in mind, folks, and I keep reminding traders as I do coaching sessions, that there's a huge disconnect between the stock market and the economy. The stock market always is supposed to be 6 months ahead, so on and so forth. There was an exorbitant amount of money that's been coming out of it in all sorts of different sectors, and so that's being cashed out based on worries and fears or the inkling and the numbers of inflation, pressures, contraction in the economic growth, and we've had a massive growth for a long, long time. So there's nothing really there. There's knock on glass here, folks. There's no job loss, no shutdown, no slowing as of yet, but inflation is definitely there. So far, the consumer can absorb it, and it isn't. And that I believe was what the Fed is looking at. They don't care about the stock market. They're not supposed to care about the stock market. They're supposed to see about the economy, and it is slowing down, but it's not falling apart. So let's keep that in mind. Sentiment is bearish and worried. We're not seeing much, if any, buying off bottoms like we used to. The fear of missing out guy would come running in and, oh, here's my chance to buy ABC stock at a super low price, and we'd see these things rally off the bottom. There's a little bit more worries than that moving forward in the longer term. That's cool. That's healthy. This is still a corrective market. It's super bearish and it's falling apart fast, but there's not a lot of fear there. Inflationary leads the way. Inflation, I should say, leads the way. Biden looks to ease gas tax. I saw that. I thought it'd be kind of fun to throw out there. I don't think he's going to get it done. I'm just kind of following along with it. He needs to ask Congress for a 3-month leave on Fed tax and asking the states to do as much, so it could knock it out 5, 10, 15 cents a gallon. However, this can have an adverse effect, meaning it could create demand for gas and higher consumption, what has happened with higher demand, folks? You've got to raise prices or increase supply. So it can have a longer-term problem for the short-term ease. So I guess the argument's going to be, does the economy need it yet, or does the stock market want it? Think about that. It's kind of funny, right? All right, let me get off my soapbox. This is one thing that I follow along with, and you guys have seen me tout this chart many, many times, of unexpected versus true pain versus what's expected. Okay, well, what does that mean, Joe? Well, I'll tell you what. When the markets get something that's unexpected, it reacts. And it reacts aggressively, and it reacts with fear. And that was that out-of-control CPI number and the worries that the Fed wasn't ahead of the inflation is what they thought. this is more of an art form, and it's sad that the Fed has to do this because it is an art form. You throw your line out there, you reel it in, maybe you get a fish, maybe you get it snagged, maybe you catch a boot, right? But you're just out there testing it and trying to keep this even keel. It's very difficult to do, but when the Fed's off, you get what I have circled here. This is reaction. This is readjustment. This is true fear. Now, it's interesting, the markets fell apart, and once it was all adjusted, notice that we went back to comfort, right? Here we are just pulling back a little bit. Now, fear's not subsiding completely, but the markets are moving higher. They're gapping up, so on and so forth. I don't know if we get above this 36 level, so on and so forth, without a true panic, meaning, oh gosh, we're way off. The target rate of the 3% or the 2% is going to have to be a lot more hawkish or an aggressive Fed. It becomes something that we completely missed, and I truly believe it's going to take something like employers start to fire people, shut down factories, and retract at an aggressive pace in anticipation, where it's kind of funny because they'll almost cause their own recession, right, based on fear and the anticipation of one. So far, the economy is weathering it pretty good, and I can see that in these numbers. So I believe this is a corrective move. It's a pullback. It's aggressive, and I do expect we get a pretty decent bounce here throughout the rest of the week, unless we get some sort of unexpected event, which causes these huge spikes in the VIX. So I believe we're going to continue a bounce. I don't know. We had a pretty good bounce yesterday. Today, we retraced the majority of today's losses. It's still the middle of the day. This is a difficult class today, folks, because I don't have Monday to go off of. I'm literally going off of a day and a half of market data, so we'll do our best here. Trade ideas, K-Web, JD, Chinese Internet still holding true. I do like Dell that Corey talked about yesterday. I thought that was cool. We'll share that chart. And NOC, aerospace, still hanging in there really good. Lemonade is something in the neutral side. This is the second week in a row that it's been within its range, so hopefully you guys jumped onto it with some sort of condor or butterfly or something sideways. And then on the bearish side, everything's bouncing. Everything's got a nice, big, beautiful green, 2, 3, 4, 2, 3 green candles, I should say, maybe not 4. But deer seems to be struggling, so I figured, hey, let's go ahead and share it, because that's all I've got so far. It's really difficult to jump in and scan the markets when you've only got a day and a half into it. K-Web looks pretty decent. This was from last week. Looks great. Sideways to up. We're playing a bounce off of that rising 20-day moving average, just below 30 there at about 27.5. And it's doing pretty good. It's pretty decent. Got a target short term of 34. I would do something more sideways to up. I'm pretty sure that eventually at some point these are going to roll over. Doing a little bit of research, folks, you talk about recession, and if the United States is indeed going to feel a recession, it won't be until after a few other countries do first. Europe, China's one. There's a couple of areas out there that are a little bit less recession-proof than the U.S. at this point, and I don't know if it's because we printed trillions of dollars or I don't know what's going on. But if things keep at a pace and recession actually gets to bleed into the U.S., it will already be in some of these other countries first. So this could be more of a leader than a lagger, but right now it's hanging in there pretty good. So I like this chart. Looks pretty decent. You could argue a symmetrical triangle pattern if you guys are thinking about, hey, maybe this will consolidate. And if your glass is half full, it'll break to the upside. If it's half empty, maybe it'll roll down and retest that moving average, the 50-day moving average around 28. So I'm going to go ahead and just tell you, folks, I can't think past a week. And as the markets get more choppy, and this is kind of my personal outlook, and if you want to jump on board, you're more than welcome. As the markets get choppy, volatile, they gap up and down quite a bit. My 1 month outlook goes to 3 weeks, goes to 2 weeks, goes to a week and a half, so on and so forth, because I can't really gauge what's going to happen in the distant future. I have to play the reactions as a trader. So I would rather increase my probability and my profitability by shortening my outlook and being very selective when it comes to targets. So it becomes much easier to throw a dart at a board that's a lot closer. Think about that. All right. let's get into, here's NOC. Let's see if I can get this slide to move forward, folks. Sorry. There we go. Industrials, aerospace and defense. I like this as a pullback. It was range bound right around the 440 to 470 level. It poked its head out last time. It had a run early June above the 480 level, and that looked like a beautiful ascending triangle breakout, or I should say high base breakout. But it did fail. So it would suck if we tried to play that high base breakout, but it did hit support once again. Let me get a line out here at that 440 mark. So this thing's been holding in really, really strong. I like yesterday's action. Today's action is kind of an inside day. I don't know if I want to play this thing all the way back up to the 490 level, but maybe a little bit of a struggle back to 480, something sideways to up, maybe a targeted calendar spread at the 465, 470. If you wanted to get a little bit more aggressive, 460, 480. However, folks, I just got done telling you that I can't do much past a week and a half recently. So play something tighter. Let's draw some support levels here. Take into consideration these areas. What's that? About 470? Yeah, 470. 460, 470. Bull call spread in the next week, week and a half. You guys have to dig into this if they have weekly expirations or just monthly expirations. If you got monthly expirations, it's best to kind of wait for the time to play itself out, and then once you have the correct time, go out and take a look at the options that are available to you. With weeklies, it's much easier because you can play the strikes that are available at the time. Plus, you've got, do I want it a week from now, a week and a half from now, so on and so forth. So it just depends on what's available. Go out there and look for the tool, the right tool for the job. Let's move on. The other one, I like Dell. This has been super strong for a while. You could see that the gap that it had the end of May, it looked pretty good. It put itself above all its moving averages enough to where it stayed sideways enough in the first week of June to where the 20 started crossing the 50. That's bullish. Then it came back down and it looked like it was going to fall apart, but it found support at that 46 level. Now, what's really cool about this is if you kind of blur your eyes, folks, this is kind of a reverse head and shoulders pattern. So I think a march back up to just shy of 52 is realistic. Now, it might take a while. This might move sideways to up for quite a bit. So something diagonalized, out of the money calendar spread, maybe shoot it up at 50 and just play it sideways from there. Shorter term, I don't know if I'd want to go straight calls. But out of the money call calendar, sure, buy something, 3-4 weeks out, sell front week. If there is weeklies available, sell the rest of this week at 50. Might be kind of fun. So sideways to up just depends on your outlook on it. All right, let's move on. Now sideways, this was on our sideways last week. Lemonade, I like this. Let me see if I can draw this channel. Boy, this thing just has been hanging in there. And we talked about it. This is an insurance company. So it's going to be, it should, I should say, be a little stronger than your basic financial company, depending on if people start to drop their insurance or so on and so forth, and this starts to get hurt. Well, then we'll see it in the stock price. But I do like how this bounced. We believe we're talking about this as it rolled over. Hey, let's see what it does at 16. It consolidated. Today looks pretty good. Before the holiday looked really good as well. It is technically below its moving averages, and the moving averages are sloping, so on and so forth. So this is kind of a bearish pattern. If you guys want to take a look at this, yes, I agree it is. However, do you want to play the channel here? Or do you want to play the slope to the downside? Well, you could do both. You could do either. If this breaks the 16 mark, let me clean up my lines here. If this breaks the 16 mark, it's a good bear. But if it can stay above it and move towards that 23, 22 and a half area, then we've got a really good candidate to sideways. So I still like it on the sideways side if for any of you guys that are actually in this sideways and have been for a while. All right, let's jump all the way down to our one bear, and it is Deere. This is one that didn't have a large green candle or two. I do like This gap down worries about the company's longevity. It climbs back up, oversold bounce, and then just completely fails again. It's in an inflationary, I should say, an inflationary influence sector. Agriculture is expensive. Everything's expensive. If the consumer drops and doesn't want to buy as much, it's going to get even worse. So I think a comfortable breakdown below, let's call it this level, right about these levels here. What is that? 323, 314, It's below 315, so we'll call it 316. If it breaks down there, this could be looking for another leg lower. So I do like it on the bear side. All right, so that's what we got for the trades that we've been watching for the last week or so. Once again, folks, it's very difficult because it's only a day and a half. The markets have been open. Let's get into a market analysis. So far, the markets have held on to some pretty good gains, and those were from yesterday. Nice gap up. The markets were down quite a bit over the last week, but a cool move up on the diamonds, the S&P, and the Qs, almost 2.5% on the Qs so far between today and yesterday. Russell's not so much. Oil took a pretty substantial move to the downside. Now, folks, I'm going to chalk a lot of that up to what was going on politically. Biden was talking about dropping the Fed tax on it and asking states to do so, and he's actually in the works to try to pass this. I don't know if it'll work or not, but it did have a pretty substantial impact on oil. I believe the futures were down over 6%. Oil was, gosh, I can't get the number. We'll take a look at it when we get there. But it was falling apart pretty good. Gold just stayed pretty much flat when it comes to the last day, and we'll call it a half. So let's jump into these charts. Here is your gap. Now, Rob talked about something on Sunday, and Corey kind of reiterated it, that we would get a bounce, but we weren't sure if it was going to be strong enough to get back up to some of these major levels. Now, right now, we've retraced the majority of the losses. Folks, we're going to go live markets here, and maybe that's changed why I'm talking, because it is that volatile, yes. So what we got to focus on is some of the gap areas. 380 becomes our new resistance. 390 is previous, and I drew a 400. I don't know why I didn't. I shouldn't draw the 400. I should go all the way to 410. It's hard because I'm in between moving averages. So these are the areas of resistance. Now, if we do get the +3 bounce, I know we're expecting maybe a +1, +2 bounce, then yes, a retest of 380 should happen at least this week. And that's just an oversold bear bounce. Up to 390, maybe through the next couple of days of Fed policies, Fed talks, I should say, we get a little bit more optimistic and bullish, and we get up to the 390. These two levels, the 410 and 400, I just going to say it, are unreachable just in the market sentiment, just what I'm seeing right now. So we need to focus on how far this, yes, I'm going to say it again, folks, bear rally goes. A few days and how far up it goes. Cool. So moving on. Let's take a look at the diamonds. This had a pretty good beat down because energy just got smoked. And I don't know if it has a lot to do with the push and pull of the oil and the Biden administration coming out saying, hey, we got to ease it up. Maybe we're going to reduce the tax, which could kind of mess with supply and demand, expecting refineries to refine more. We wanted more oil production here locally. So it's kind of all over the place, right? Energy, at least specific to oil, is pretty much all over the place. That might be what we're seeing in the energy sector itself. However, it's holding on pretty decent. Had a pretty good bounce there so far over the last couple of days, but its new test is 310, not 330. It's 310. You could make the argument around the 320 mark as the 20-day moving average and so on and so forth, but as these markets continue to fall, the rubber band effect, the snapback, becomes less and less likely unless we get something new and optimistic. I just don't see it coming in the shorter term. Q's the exact same thing, gapped up. What used to be the retracement of 315-ish, 317 and a half. Let me draw the line. Becomes, hey, can we at least hold on? Where am I at here? Sorry, folks. I'm trying to get that line. There. Or even back to this becomes, can we at least hold this gap? So it's a little bit more ominous. And you see the volume with this bounce. Like I said in the first slide, folks, we're just not getting the follow through with the buyers that we've seen in the past. We're just not seeing this anymore. I guess that one's not too big, but we're just not. At least a little bit of hold on until that CPI number disappointed. So we'll see if that continues. Let's get into some economic data. There's not much, a whole slew of it, yes, last week, along with the Fed meeting. We did get the Chicago Fed National Activity Index 0.01, previous 0.40. This is declining pretty rapidly, but it's still showing, it's not showing retraction. Expansion has definitely gone down to almost zero. So yes, consumers less, supply and demand is less. However, what's kept this number on the plus side is jobs are being held. Not a lot of firing going on. People are still working. So that's really good. Existing home sales came in at 5.41 million, previously at 5.6. The expectations were for 5.41, so it came in line, but you can see it is moving south. That was to be expected based on what's going on with interest rates. Jobless claims, continuing claims, current account deficit. We do have actually kind of, I thought we would have less than this, but a pretty decent amount of economic data. However, based on how many speeches we got when it comes to Powell over the next few days and some of the Fed heads, I think we've got enough to worry about more than these numbers. So let me go ahead and pull real quick as you guys take a look at this economic data. Let me launch this. Now, I don't have -3 or +3, but I just want you guys, for today's poll, to select what you think through the end of the week. Forget the month, just the next 3 days, 2.5 days. What do you guys think for the next 2.5 days? That's kind of what I want to do. Now, I had a conversation about bringing out two polls. The first would be your short-term outlook, and then your second would be the long-term outlook. And I still might do that. However, since this is a midweek update, I figured I'd split the difference between Sunday, Wednesday to Sunday. So let's just stick with what we know. In the next 2.5 days, folks, what do you think these markets do? All right. So it's pretty interesting, as you're taking this poll, that the existing home sales came right in line with expectations. So as far as the adjustments when it comes to interest rates, it's actually curbing one of the main problems with inflation. Is not only just housing costs and housing prices and mortgages, it's rents. So that, if we could get all of that to come down, that's a huge kick to inflation. Now, we did know that the consumer is down a little bit. Retail sales were down a little bit. So on our end, we're consuming a little bit less. But I'm not sure that knocking down the gas price is really going to do much but increase activity. So if your idea is to slow stuff down, and don't get me wrong, it's really cool to see that the consumer expects this. That VIX number, folks, seeing that VIX number kind of park itself above resistance shows that at least the markets were expecting this. The markets were expecting a correction and a slowdown. The markets were expecting, we knew the economy was hot. We knew the economy is overblown, so on and so forth. So it's kind of a good indication of we're actually online. There's not a lot of fear out there. There's worries and upset, and people want to pull money out of the markets, but there's not a lot of fear yet, which is kind of good. Okay, 100% vote. Oh, I love it. Close, share. Let me pull this up, and let me drag this over. You guys know how I like, because you can't see it. All right, there it is. Whoop. Okay. Well, hopefully, yeah, there's your audience view. That's what you guys are saying. And now, everybody that's watching this recording can see it. I've tried to zoom this in before manually, and it's so funny to watch me do this. I'm so uncoordinated. There it is. I got it to work. Okay, so we are definitely looking for a bounce, aren't we? 0 at 53%, 53% at 0 to +1, I should say. Both are the same. And then a little bit of a 12% on the outliers. Boy, that's an absolute bell curve. You guys just completely voted a beautiful bell curve. As the high point is 0 to +1, and then +2 and -1 are the outliers at 12%, and then 0 at the 2%. Awesome job, folks. And I agree. I think it's pretty much right on. Cool. Thanks for that. Okay, so let me get to what I'm looking at. Obviously, right in line with you guys. I've got a definitely -3 on the monthly outlook. I'm going to stick with that. And I'm going to +1. Plus two. Sorry. Whoa, that just kept going, didn't it? +1 to +2 is what I'm after. I'm going +2 because I truly think this Fed talk will calm a lot down, saying the first thing that I've already heard before this class started is the economy can handle this. There's enough strength out there to handle us increasing aggressively. We want to get ahead of this. You watch. It's hopefully it becomes kind of a cheerleading rah-rah moment, and that I'm hoping that I shouldn't say hope. In the next couple of days, we at least get above the 380 area and maybe climb towards that 390. That might be kind of cool. All right, so I'm optimistic as well. And take a look at our sector outlook, because what energy's done over the last little bit has been pretty interesting. I haven't seen a fall off like that in a while. So a quick breakdown of what the sectors are at. This is the weekly outlook using on Finviz, folks. So I do believe it's Wednesday to Wednesday. Utilities, flat. Communications, up. Real estate, good bounce. Industrial, slipping. But look at energy. Energy and materials. The leaders for so long, just getting smashed. Technology, pretty decent bounce. Consumer, 2% bounce. That is consumer discretionary. Now, folks, consumer defensive was at about 1.79%, so the two consumers are very close to each other. That hasn't always been the case, but healthcare definitely leading the way. I thought that was pretty interesting. I'm not sure why. Maybe it's just this oversold bounce, or some of the talk about a new round of vaccines coming out for COVID, specifically for kids ages 5 and under, but I think they've got like 4 or 5 other strains identified, and so it's going to be, let's call it what it is for the rest of our lives, folks. It's going to be in the flu shot forever. We're always going to have a COVID mutation in that flu shot each year. That's just kind of where we're going, and maybe that's what we're seeing here. However, it does look like an oversold bounce. It's nothing that I get excited about. The volume doesn't look very good in that last couple of days to the upside. You kind of take it for what it is. Now going into energy, interesting fall. Falls apart, slips a little bit. I do believe that today's gap down might have had a lot to do with kind of the intervention going on politically with energy, oil specifically. We've seen the futures market come down a lot, which is nice to see. It's nice to see oil come back down off of that one. I believe it was a 120 mark last week, and I think we're at the 106 today. Boy, I'll have to double check that, like I said earlier, but it's fallen apart. What we don't want to see is an increase to demand and to see oil prices go back up or oil futures move higher. And having a bounce is fine, but moving back up to those 120 marks, 121, that's going to create a lot of problems in the long term. But this to me looks like it's kind of fallen apart, trying to find a base. Nothing I'd want to short. It's also nothing I want to buy either. All right, enough babbling. Let's get into some conclusion here. Fed speak the rest of the week. Markets should react to the tone and message. Just depends on how it's digested and the sentiment of the markets at the time. I imagine a lot of it's going to have a positive spin. Fed coming out and say, hey, we got to be aggressive, but we know the economy's strong enough, and we know that in the future it can handle it, and it's going to be specific to the economy. I do believe they're going to tout a lot on the employment levels and how high they are, and everybody's got a job, which is great. It's good. A slowing consumer shows a little bit of responsibility, so all positive, 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 positive. Don't confuse the markets with the economy, and I think that might be the message as well. We've got 3 days to listen to this. I'm not going to listen to it. I'm just going to read the highlights, but if you want to, be my guest. So the markets are still looking for some sort of a bottom. I do believe that this week could maybe establish that. If we do, in fact, folks, get that 0 to +1, mine was a +1 to +2, it could keep us high enough to where next week we can absorb the next pullback. It just depends on how far this bounce continues. So sentiment's definitely bearish, looking for a sign of a bottom, reason to bounce. We might get that this week. Technically, we'll probably just continue to move higher unless something happens. Economic data is still hot with inflationary numbers, slowdown in manufacturing and consumer, which is a good thing. We want to see it curb. Employment remains solid. That is the true thing that's kept these markets out of the R word. Recession's been talked about so much. The markets are absolutely trying to price it in. You got a lot of companies still trying to do it. But if that employment can remain as solid as it is, and we don't see layoffs, we could absorb this. All right, that's enough let's get into the markets and talk about some positions. These are the ones we looked at last week. A couple we kept going. At least KWEB we did. All right. As I've been talking, we just retraced those losses. And we're back to neutral. I'm kind of betting, folks, that we do close positive. I think this bounce continues for this week. I don't know if it's going to be super strong, but I could see it being more than just a day, right? So we'll get from there. All right, let me get started. James has got a stock to look at. It is EDU. Kind of continuing on with our Chinese stocks. Look at the pullback. Good bull pullback to the $20 area. Boy, that was a pretty good move in June. He wants to see how today finishes. That's what he's looking for. Okay. Okay, cool. So yeah, let's talk about it. I agree. It's got this real cool area up here that it wants to kind of revisit. And there is some pretty good support at 18, but I did see where it could level off here around 20. It'd be nice to have these moving averages catch it because I do believe it's a little bit extended. So it looks really good, but it could just roll over and fall apart at any minute. But if we were to play the chart, just the pullback with the confirmation today of a pivot point, yeah, retracement back up to 22 or 23 and a half. Sure. I'll keep it on the bull watch because it definitely has potential. It just depends on what the U.S. markets do. But boy, there's still a lot of strength there, and I would not have expected that. Personally, I just think that if we're worried about retracement, slow down our economic growth, I don't know how that doesn't affect everybody else. Because we're all kind of intertwined. Justin's waiting for Disney. Potential entry on Disney, thinking a $90 target to the downside. Butterfly to the downside. Okay, well, let me zoom in a little bit. Disney's been one that was holding in there and just slipped this month. One thing to take a look at, I was taking a look at travel stocks. Disney, I guess, is a theme park. They make a ton of money and other stuff, but Airbnb, airlines, hotels, lots of them have just kind of given up over the last little bit. And I'm wondering if it's an expectation of slowdown over the summer because of this recession worry or just a tightening consumer. Let me draw the line here. 90 targeted butterfly. Okay, sure. Yeah, it's got this great breakdown of support at 100. It's basing. If it could bleed off a little bit. Yeah, I don't mind that. Let me put Disney down as that bear. Disney's bear, kind of a sideways, kind of a slow bleeder. Like it. All right, cool. Thanks, Justin. Also watching Chinese internet stocks. Yep. There's a bunch. Sebastian's got a range rally. Let's see. What do we got in this? AMGN. Zoom in on this for us. Okay, cool. Yep. Look at that. Very nice. Having a little bit of a bounce. I mean, it's wide. Actually, I'm fine with that. Completely fine. He's got a July 1st call butterfly 247, 245. Let's do 245. Right midpoint there. Very nice. I like it. Okay, 247. Just right about there. And then the downside is 242 and a half. Very nice. I like it. 4-to-1 risk reward. Awesome. July 1st. And that's worked out pretty good, folks. We did do a live trade on McDonald's that came in pretty much exactly where we wanted it to, at about just below 235, I think, is where it closed. So it did work. And then, since then it's shot up. So being more than a week, it's going to be super difficult to absorb. But I like that one. Can I put AMGN as sideways? But I'm going to put up arrow on it because you were upwardly targeting. I think that might be safe. Thanks, Sebastian. All right, Dan's looking at steel. Let's take a look at that. We've got a 17, 20th July, August 19th diagonal put. So month to month, 2019 diagonal put spread. Okay. All right. And it's right in between. And I think what you're trying to do here, sorry, that's not a straight line. This would be a beautiful thing to have just kind of fizzle itself out and then fall apart after your expiration. I like it, Dan. I like it. Steel on the bear side. I'm going to put it bear side. And I'm going to put sideways because you use a diagonal on it. That's awesome. If there's going to be a slowdown in manufacturing and production and so on and so forth, then yes, this should bleed off. Gap down, move higher today. Really neat thing that you want to see when it comes to diagonals or targeted butterflies, something time sensitive like those. It's still really good. Even if it climbed back up to 20, it's in a good spot. Thanks, Dan. Yeah. Just didn't know if you were going to reveal how you knew McDonald's would get there. Well, Dan, I didn't. It's just time. That's all this is. It's well, if you guys saw the class, the live trade class, I just did the Fibonacci snapshot and realized that there's a chance. All right, I'll talk about it. I don't really want to get into it. There's a chance that it was going to revisit a percentage, and it did. It absolutely hit it. So we snapped the Fibo from here to here, I believe, or was it here to here? And this 235, I think, was the 61%. And we put this bad boy on, I believe, this day, and it hit it. And I didn't get out because I remember I was going to take a third at a target. I didn't get out, but it came down. I took a third. I took 2/3 this day because it was the day before expiration, and then I closed the rest on that day because that was Friday, right? So it worked out. It worked out really, really good. It was nice to see that it actually turned right at that 240 mark. So at one point I could have been dead wrong. It could have shot right back up to 245, but it just worked out. Anything longer than that, remember, guys, this thing I put on, it was right before that weekend. I kept it for, what, 5 days? There's no way I had confidence in anything past 5 days. I still don't. So, all right. Let's see. RSG, Joel, let's take a look at it. Okay, this would be a counter trend. Okay, but it looks like wants to push higher. Monthly expirations would July 130 call be a dumb purchase with a plan to sell it when it gets in that 129 130 area. Okay, so we're playing a bounce. Now these are difficult because, hey, as far as this class's outlook and my outlook included, we expect a +1, even me, a +2 through the end of the week. So what you do is you use previous resistance areas. And I think the question was a 129 130, and I truly believe that's too high. I could be dead wrong, but let's call what it is. This is where it's going to hit its resistance first. So something like that, sure. It's difficult to play bounces, and folks, that's my weakness. Is counter trend trading is very inconsistent with time and distance. When you're playing a downtrend, it's easy to say, hey, it's in a downtrend. My monthly outlook is X, and if I make a mistake longer term, I could absorb it and go to the downside. But if we get a 2-day bounce versus a 3-day bounce versus a 5-day bounce versus and even Rob said this on Sunday, 2% bounce, 5% move, that can happen in 2 days. So I'm okay with it, Joel. Just make it scalpable. Yes, my favorite word, scalpable. If you're doing something like a vertical spread, this isn't going to work. If you do, and once again, folks, that McDonald's butterfly spread that I actually made, I left about $800 on the table, which was probably a quarter of its max gain because of how important time decay is. I think I covered it on an average of $2.40, and by the time the bell rang, it was going for $3.20. So if I had just been patient enough, I could have made another $800. Something, the exact numbers are off, but you can see where I'm going with that. So If you're going to counter this, you got to do it with something much, much less time sensitive. And I don't want to say it, but a straight call would make more sense than a vertical spread or something, or a credit spread, or even a targeted butterfly, unless you're willing to go to that exact expiration cycle. So keep that in mind, Joel. It's a tough one. I mean, once again, if you wanted to do a 127.5 target in the next 3 days, sure. Then the vertical spread works. Targeted butterfly works. All of those things work. You don't have to go straight calls. But if you want to hold this until it gets to 130, then you're going to have to just kind of guess on the time. Thanks for bringing it up. But yeah, the best thing you could do is wait for this to bear rally, hit resistance, roll over, and sell to the downside. That would be my 2 cents. But hey, Joel, thanks for the topic. Let's see. Like the volume on PAYX. Okay, Dan. PAYX. Get rid of that chicken scratch. Ooh, yeah, good volume. And it bounced a little bit, but it's not doing so well. This is definitely on the bear watch. PAYX. At the pivot for a bounce up the range, 115, 125, 135, call butterfly spread. Oh, I don't know about that one, Dan. Let's see, 115, 125, 135, 115, 125, 135. You're expecting a bounce up to here? Whoa, Dan. Woo. Nope. Can't agree with it at all. Sorry. I get it, though. I get it. Because, hey, capitulation bounce looks pretty good. But it's still got to get above this. And then you've got this and the 20-day and this right through here. Well, then again, you're pretty close to the 125. But do you have a time on that? Let's see. It's going to have to be longer term. If you think that, hey, the markets have bottomed, honestly, if you truly believe that the markets have bottomed, that was it. We're going to have a pretty good day here. Maybe pull back a few more and then move higher. Yes. Through July expiration? Sure. Not my cup of tea. But, boy, I bet you it's like a 10, 15 to 1 risk reward on that thing. But I do have to completely disagree with that. It gets up to here, hits 120, comes back, hits 115, comes back, breaks 120. Absolutely. You give me this pattern, I'm on board with you. And you could say I told you so, but I'll play it between the 120 breakout to the 125 target with an 80% probability than trying to get it from 115 to 125 with a 20% probability. Awesome. Once again, geez, guys, I love it. Like I said, now Dan says, yep, longer term, August question mark. Just depends. Depends on how well you believe it. What's really cool about how we trade, we can get it in and out. That example I just said about with paychecks here. Longer term, that's sweet. And the best thing ever is Dan puts this on today, and exactly on August expirations at 125. That is going to be a massive gain. However, I'll wait for it to get to here. I'll put it on at 120, 125. I won't make as much, but I won't be in it as long with a higher probability and less risk. We can do that, guys. We can do that. We don't have to try to get in before this pattern happens. Why don't we wait? Just wait. One thing I'll tell you that I would like to do is, let's say that, folks, we have our +1 outlook, my +2, and it does come back up to this 120 and then roll over. I would love to short this between 120 and 115. Or let's say that the markets completely fail, and I'd like to short this before 115 to 110. So there's one trade, 2 trades in the same amount of time. Don't think that you got to lock yourself in the long term for swinging that bat and trying to hit a home run. What would be kind of cool, and this goes back to what Joel was talking about on the last, playing the bounce. Why don't you play from 115 to 120 for the next week and a half? How about that? And then, if it goes from 120 to 125, you play that the next week. So, really cool. Just, hey, throw darts. We don't have to sit there and buy and hold. But excellent conversation topic, Dan. And I do see where you're going with that when it comes to the bounce, but I wait for the trend to get a little bit more in your favor. Cool. Great stuff, guys. Okay, let me get... that's it. We got through them. Okay, here's our markets. Consolidating. We talked about this on Sunday. I'm going to have to completely agree with everybody that I just think that the markets kind of chop around, try to fill what they can. This is definitely a bounce week. Definitely. The Fed's going to come out. I'll say all sorts of cool things. Let me type up the trades to look at while I'm blabbling here. It's definitely going to be spun bullish. It has to be. I think they understand that, and we understand that. So we'll see what the markets do with that. AMGN. A couple of bears. Disney. And Steel. And PAYX. Okay. Here is our list for today. Take a look at that. I want to add a couple of things to it. Some sideways stuff, because these are pretty good trades here. AMGN was kind of a targeted to the upside. Disney, I like bearish. It was a bearish. I believe it was a bearish butterfly. I like that one too. Steel as well, and then Paychex. Oh, nope. Paychex was just bearish straight up. Cool. Let me just cross that out. All right, guys. Excellent. Difficult Wednesday. You come off a Fed meeting, didn't get the distinctive bounce or sell-off. It's been chopping around since. I think the markets are trying to figure out what to do. Longer term, definitely bearish. Shorter term, it's going to be super volatile, expecting a bounce. So far, once again, it's been a day and a half. We're getting that bounce. With only a day and a half to look at, it's going to be super hard to predict. So just kind of keep your powder dry. Watch these patterns develop. There are some bulls out there if you want to throw in short term. Once again, bearish too, stay short term. If you've got a bear watch list like I do, well, some that I've been sharing with you guys, everything's been green. So I got to wait for a lower pivot, and then once that confirms, it'll coincide with my -3 outlook monthly, and I could be much more comfortable with higher probability trading to the bear side. All right, guys, awesome work out there. Thank you so much. Appreciate it, and we'll talk to you next time. See you, everybody.